I always start off with every consult explaining, first of all, the circumstances and the repercussions to giving up a green card or citizenship. Remembering that we deal with the IRAs, but USCIS is also involved, the United States Citizen Immigration Services. And CBP officers, Customs and Border Patrol, that stand at airports like JFK and LAX, the international airports. Once somebody expatriates, that individual is in the system. So like every other country, the US doesn't take offense, but they stand up and take notice when somebody basically gives their citizenship back or their lawful permanent residence green card back. It's a very serious, bold step, and it is grounds for denying access into the United States, and that happens quite often. There are very notable cases of individuals who have expatriated, giving up green card U.S. nationality, that have been denied entry. Basically, they show up at LAX, at JFK, and they're turned back, and they have to get back on that airplane and go back to home, wherever that home is. So that's the first thing I always bring up, and I also always bring up the fact that, you know, anybody who expatriates that's married to a U.S. national that doesn't give up their nationality is really putting themselves in a very precarious situation, or even worse, as children that are U.S. nationals, because, you know, if they expatriate, there's a distinct possibility they may not be able to visit their kids or their grandkids in the United States. So what I try to do is walk them through that, first of all, and then explain to them that U.S. expatriates living anywhere outside the U.S. will never, ever be subject to double taxation. They will pay the higher of the two taxations in the U.S. or the respective country they're in, but never double taxation. Generally, really just based on domestic laws of both countries. But also we have income tax treaties that are in place as well. Remembering, of course, that when it comes to the income tax treaty, limitation on benefit or savings clauses for U.S. nationals or residents can play in. So it's always important to keep that into mind. But we try to coach people that are interested in giving up their green card or their nationality, that although it might seem like the sexy thing to do, it's not only the smartest thing to do, because if they simply hired a decent CPA, a global mobility tax specialist, like Protax, to file their returns annually, in most cases they could keep their nationality or their green card and never pay any double taxation. And if, in fact, if they work and live in a country that has a higher income tax than the United States, never pay any U.S. tax at all. But if they move to a low tax or no tax country, they'll end up paying the higher of the two taxes. So always important to keep in mind. And generally what we find is the people that want to expatriate are going to no tax countries or very low tax countries, Hong Kong, Singapore, or the Middle East, where there's generally no tax. And they're big, big income earners, in which case it makes a little more sense. So what happens is with a green card holder is that we first need to see, are they a long-term resident, an LTR? And that's where they've held that green card for any part of 8 of the last 15 years. And if they are, then it's the same considerations for green card holders filing an I-407, an abandonment of lawful permanent residence, as it is for a U.S. national filing a DS-4083, abandonment of U.S. nationality. And that's, are they a covered expat? And we look at really 2 tests to see if they're going to be subject to the exit tax. And so those 2 tests are the net worth test and the income tax test, or what we call the income tax test. The net worth test is a straight $2 million, assets less all liabilities. And the income tax test is whether their income tax liability, joint, in the case of a joint filer, is above a certain annually indexed amount. So where either test is met, they are covered expats, and they will suffer the exit tax, which is in essence a tax on all unrealized gains to the extent that those unrealized gains exceed an annually indexed exemption limit, with carve-outs for certain type of items like 401k or IRAs or 529 plans or foreign pension plans, etc. So those are kind of carved out of the situation and dealt with separately, but yet all part of the expatriation and the exit tax. By the way, most countries have an exit tax, and the whole purpose of an exit tax is that it seeks to tax an individual on the way out the door on all their unrealized wealth earned while they had the benefit of being a resident alien, a citizen, or a green card holder. Again, we also look at the age of the individual, generally, and the profession, right? Generally, we would try to convince younger taxpayers that may ultimately return to the United States, especially in areas like IT or banking, where the U.S. is the epicenter of the world, that perhaps giving up citizenship or lawful permanent residence green card is not the smartest idea. Unless, of course, they're in a retired phase of their lives and they have no intention of ever coming back to the United States again. So it's Form 8854 that must be filed if the lawful permanent resident is also an LTR, a long-term resident, or in the case where a U.S. national gives up their citizenship, that must be filed, and that Form 8854 will be included with what generally is a dual status filing, generally a Form 1040 NR return with a Form 1040 statement, including the Form 8854. The purpose of the Form 8854 is to either confirm or deny that the individual is a covered expat, and if they are a covered expat, Form 8854 proceeds to determine what that exit tax is, which then gets transferred to the return itself. I would caution everybody out there to be super careful about expatriating. Gather all your facts together, consider everything, speak to a global mobility tax CPA about expatriating, spare no expense, because it is a very serious procedure that once performed is irrevocable, right? And the chances of getting citizenship back again or a green card back again after you have filed an I-407 or a DS-4083 are very, very remote.